My name is Jeffrey Kennedy, and welcome to Elliott Wave Junctures. Today we're going to look at RSI, Relative Strength Index, and Elliott. Now, RSI was developed by Wells Wilder back in the late 70s, and it was later popularized by Andrew Cardwell, who actually came up with what he calls range rules, which are very useful. Essentially, what that means is in an uptrending market, when prices are moving higher, what you'll find, or the momentum signature which occurs in RSI, is that RSI tends to find support in roughly, say, that 50 or 40 handle. This is an oscillator, meaning it's a banded oscillator going from between 0 and 100. Likewise, in a downtrending market, what you'll experience in RSI is that RSI will encounter resistance between the 50 and 60 area. This is very important for an Elliottician because we look at counter trend moves as well, but we identify these counter trend moves as waves 2 or waves 4 and waves B and waves X. For example, what we have here, this is a price chart of Rock 10, and what we have up from the, say, November 2011 low, we have waves 1, 2, and then we have a clearly subdivided third wave followed by 4, 5. Very standard impulsive structure. Now let's look at these counter trend moves within the move. That would be wave 2 and this wave 4 and that wave 2 and this wave 4 as well. Let's examine these counter trend moves within this advance, and what you'll see is that the RSI signature is very much present, and that would be that in an uptrending market, RSI finds support between 50 and 40, as it did here and here and here as well as here. Also, too, as everyone is very familiar with, RSI is very good at identifying divergences between price extremes as well, but that's not today's lesson. Today's lesson is how to utilize RSI to identify counter-trend moves within uptrending markets and counter-trend bounces in downtrending markets, and how, again, that works with the wave principle, and it allows you to have more confidence in your wave counting ability, and also in identifying higher probability trade setups. Here's a price chart, a 240-minute price chart of heating oil, and again, this move to the upside is a clear impulsive structure. Waves 1, 2, 3, here's my fourth wave move, and then we see the fifth wave advance. And as you can see, RSI found support in that 50-40 handle, which is exactly what it should be doing. My name is Jeffrey Kennedy, and welcome to Elliott Wave Junctures. In other words, you can look to the RSI here, see the appropriate momentum signature, and that will increase confidence that this is indeed a fourth wave move or possibly even a second wave move. Now, this price chart actually comes from yesterday's lesson. We were examining head and shoulders pattern. This is the Morgan Stanley, and I was showing how the head and shoulders pattern is incorporated very nicely, or fits very nicely into the wave principle. Here was our head and shoulders pattern in Morgan Stanley. Here was our Elliott wave interpretation, which identified